Hello, investors. Good afternoon. Welcome to Qisda Corporation 2024 result of the second quarter investor conference. This conference is chaired by Chairman of Qisda Corporation, Peter Chen, and President Joe Huang, and CFO Jasmine Hong. Also invited GM of each business group, joined by GM of Information Technology Business Group, Daniel Xie, GM of Commercial and Industrial Business Group, Yuqing Lin, GM of Medical Business Group, Harry Yang, GM of Business Solutions Business Group, Joshua Zhen, GM of Networking and Communication Business Group, April Huang, and our CIO, Michael Wang. Today's conference is estimated to take 1 hour. Agenda is as follows. First, Jasmine, CFO, will bring us the financial result of the second quarter of 2024, followed by Chairman Peter Chen and our President Joe Huang to bring us the business update and outlook, followed by GM of each business group to give us the results and briefing. Later, we will enter Q&A session. You can use the question box to submit your question. We will collect them and answer them later in the conference. Before we commence, we want to remind you to pay attention to the slide 4, Safe Harbor Notice, as content contain forward-looking statement subject to risk and uncertainty. Please spend some time to read through the content on slide 4. Thank you. Next, we will hand over to CFO Jasmine to bring us the second quarter financial result of 2024. Hello, investors. I am Jasmine. I will introduce Qisda Group. Qisda is a group with business spanning information technology, medical, smart business, solution, and networking communication. We are a global technology group. We established in 1984. IPO year 1996, ticker number 2352. In 2024, we have won awards regarding sustainability. We have won consecutively 6 years of HR Asia Best Company to Work For, and Area Award for 2 consecutive years, and Finance Asia, Asia's Best Company. For global presence, manufacturing sites located in Taiwan, China, and Vietnam, sales office more than 200 worldwide, R&D sites located in Taiwan and China, number of employees more than 26,000 people. Revenue breakdown, Asia account for 53%, America account for 27%, Europe 19%, other 1%. Next slide. This is our business groups. The purple blocks are our high value added business groups. The green color are our original business group. IT business group in the first half, revenue reached 52.6 billion, account for 54%. Medical, BSG, and NCG revenue reached over 10 billion. Medical, 12.3 billion. We have 2 hospitals, Nanjing and Suzhou BenQ hospitals, and we also offer medical management consulting services. And we also have product equipment and consumables, operation table, surgical light, ultrasound, intraoral scanner, and dentistry consumables. And in recent years, we're actively distribute dialyzer market. We also offer streamlined services. In BSG Group, we also offer total solution, integrate software and hardware, focus on IT intelligence services, which include AI computing, cybersecurity, edge-to-cloud integration, and digital transformation. Also, OT intelligence services focus on green energy, automation, and industrial computer and integration of OMO solution services. In NCG Business Group, we focus on 5G and low Earth orbit satellite. Others, we have material services other than polarizer. We also offer functional film and battery products. For key investments, we have equity methods, Darfang and Norbel Baby, which is Dingding Drugstore, and Rapid Tech, low Earth orbit satellite, and TopView. And FVOCI, we have AUO. Let's take a look at 2024 second quarter financial results. Let's look at the highlight. In the second quarter, the revenue and profits grew on QQ basis. Revenue reached 49.9 billion, up by 2.9 billion QOQ, up by 6%. OP income 1.18 billion, up by 0.26 billion QOQ, up by 28%. Profit attributable to Qisda 0.60 billion, up by 0.41 billion, up by 158%. EPS 0.34 NTD, up by 0.21 QOQ. Other than that, our growth margin also reached 16.7%, up by 0.7 percentage point QOQ, surpassed 16% for 5 consecutive quarters and highest in 20 years. Other than that, our OP income margin also reached 2.4%, rising for 2 consecutive quarters. Let's look at business group performance. IT business revenue reached 27.4 billion QOQ, up by 2.2 billion, up by 9%. IT revenue and growth margin and OP income margin has hit the highest since the first quarter of 2023. IT original revenue grew 9% QOQ. Growth margin, OP income margin, and OP income amount grew on YOY and QOQ basis. For IT high value added business group, revenue grew 4%. And growth margin, OP income margin, and OP income amount grew on QOQ basis and higher than the previous 2 quarters. High value added business group revenue reached 22.8 billion QOQ, up by 1 billion, up by 5%. The major growth momentum come from medical business group. Revenue grew 9%. Not only that, growth margin and OP income amount also increased on YOY and QOQ basis. NCG revenue grew 10% QOQ. However, impacted by inventory digestion, growth margin and OP income margin decreased on YOY and QOQ basis. BSG revenue slightly decreased by 1% QOQ due to revenue scope decrease. Growth margin and OP income margin also decreased on YOY and QOQ basis. First half result, revenue 96.8 billion, YOY down by 5.8 billion, down by 6%, mainly because NCG and BSG suffered from digesting inventory level and low overseas market demand. For IT and medical business group, continue to grow in the first half. Net profit attributable to Qisda 0.92 billion, YOY down by 0.43 billion. The revenue scope decreased, even growth margin increased. The operational cost remained flattish, and hence the profitability decreased. However, in the first half, growth margin reached 16.4%, YOY up by 0.3 percentage point, hit highest in the same period in 20 years. For the past quarters, we've seen that demand for display continue to grow. Revenue was 36.1 billion, up by 7% YOY, up by 2.3 billion. Also, growth margin and OP income margin and OP income amount grew on YOY basis. Let's take a look at consolidated statement of comprehensive income. The second quarter compared to the far right, the first quarter of this year, revenue 49.8 billion, up by 2.9 billion. up by 6%. Gross margin 16.7%, up by 0.7 percentage point. Growth amount up by 11%. OP income 1.185 billion. OP income margin 2.4%, up by 258 million and up by 28% QOQ. Non-OP income compared to last year same period, up by 283 million. OP and non-OP income grew on QOQ basis. Therefore, net income attributable to Qisda grew by 0.4 billion, up by 158%. EPS up by 0.21 NTD. On YOY basis, revenue down by 2.2 billion, down by 4% YOY. As we have mentioned, NCG and BSG are on downward trend, and IT and Medical Business Group are on upward trend, thanks to growth margin up by 0.4 percentage points. Therefore, growth amount only slightly decreased by 0.17 billion, down by 2% YOY. Although OP expense only up by 80 million, OP income down by 258 million. Non-OP income last year enjoyed one-off comparative interest, so down by 502 million YOY. Net income attributable to Qisda down by 361 million. EPS down by 0.18 NTD YOY. Let's take a look at first half consolidated statement of comprehensive income. Revenue reached 96.8 billion compared to last year same period, down by 5.7 billion, down by 6%, mainly because NCG down by 4.8 billion, BSG down by 1.6 billion. And IT and Medical Business Group are gradually growing. Growth margin in the first half, 16.4%, up by 0.3 percentage point YOY. OP expense slightly increased 18 million. OP income down by 681 million, down by 24%. Net income attributable to Qisda down by 428 million. EPS 0.47 NTD, down by 0.22 NTD YOY. Consolidated balance sheet highlight. Let's take a look at total assets. Reached 195.8 billion. Total liability 67% compared to the first quarter. 68%, slightly down by 1 percentage point. Inventory level 38.9 billion, up by 2.2 billion on QOQ basis. Account payable 32.5 billion, up by 4.6 billion QOQ. The account payable and inventory are prepared for the third quarter growth momentum, and the inventory mainly located in DMS, in design, manufacturing services to stock up for the third quarter. Account receivable up by 1.6 billion. This is because of the growth in second quarter is higher. Cash decreased by 6.6 billion. And financial debt down by 5.1 billion. This is the financial arrangement. The first half book value per share reached 18.94 NTD. Okay, let's take a look at financial ratios. No major changes. Account receivable turnover remains 74 days. Inventory turnover 87 days. Account payable turnover 71 day. Cash conversion cycle 90 days. Down by 3 days QOQ, down by 7 days YOY. Let's take a look at financial trends on quarterly trend. Focus on growth margin and OP income margin. Let's take a look at lower left. We can see the growth margin. It has reached more than 16% for 5 consecutive quarters since the second quarter of last year, now reached 16.7%. And OP income margin, you can see the fourth quarter and last year and the first quarter this year, we have met 12. And in the second quarter, it has returned to more than 2%. On the upper right, we can see the OP income. We can also see the 12 happened in the fourth quarter of last year and the first quarter of this year. And in the second quarter of this year, the revenue reached more than 1 billion. And this slide is financial trend. It's the second quarter performance comparison. Please refer to the content. Let's take a look at business group revenue trend, quarterly trend. The purple block are high value-added business revenue in total. Let's take a look at medical. Revenue reached 6.4 billion. The first quarter, due to the impact of Lunar New Year, the revenue was lower than 6 billion. But that was an exception. For BSG, impacted by slow demand from overseas market and inventory digestion, revenue down from 8 billion to 7 billion. NCG, also impacted by inventory digestion, revenue reached 5.7 billion. ITHVA, we have reached more than 3 billion for 3 consecutive quarters. IT Original, in the second quarter, it has reached highest in compared to the past 6 quarters. And in the second quarter, it reached 24 billion and keep growing. Let's look at financial highlights by business group. On YOY basis, group margin range for the business group that has across one range. Let's look at medical business group. It has grown one range on growth margin performance, both on YOY and QOQ basis. Also, IT high value-added business group, growth margin range up by one range on QOQ basis. Others remain flattish. For the revenue breakdown by business quarterly, please look at the content on slide 18. Okay, let's take a look at listed companies' result. Comparison between first half and last year first half. We can see better and weaker performances in IT business group, data image and Simula. Both revenue and net income are on downward trend. Medical enjoy better performance. Revenue, net income are increasing. Thank you, Medical Tech. Revenue grew and net income grew even more. Concord Med, revenue up by 30 million, net income up by 4 million. For BSG Business Group, Partner Tech, revenue grew by 5%. Net income also hit highest in the same period in the past 2 years. And we can see a significant difference. Meta Age, revenue down by 5%. Net income down by 50%. Meta Age, the performance in Taiwan market is actually not bad, but overseas inventory digestion affect the overall performance. NCG, IDT grew, revenue grew, and net income also grew and hit highest in the same period in the past 4 years. Alpha Network and Hytron, revenue and net income both decreased. Investors and friends from press media, good afternoon. Hello, I am Chairman of Qisda Group, Peter Chen. Time flies. We have reached the second quarter of investor conference. Looking back, last quarter we have reported we are holding the thought for the trend on revenue and profits should come back quarter by quarter. As Jasmine shared, on revenue and profit, we are heading toward to a better performance compared to the first quarter. And of course, the growing slope is not as good as we expected. Revenue grew from 46 billion to 49.9 billion, grew by 3 billion. EPS grew from 0.13 NTD to 0.34 NTD QOQ, and the first half EPS reached 0.47 NTD, and last year 0.69 NTD. And we hope in the third quarter we can reach our original performance. The revenue and net income can come back on a growing trend. And we have confidence this year. This is because the first half continue the momentum of last year second half. And we can see that the second half of this year, revenue and net income are slowly improving in the second half of this year. In the last investor conference, we have also mentioned in 2024 Qisda Group, revenue and net income, we hope the general performance should be better than last year. This is our observation for the entire economic performance. We will be prudent, but also optimistic to moving toward to a better performance and hope to give better results than 2023. And for the overall perspective, I provide my personal perspective and observation to share with investors and friends from press media. For the detailed information, I will have Joe and GM of each business group to give you an update and outlook. And after that, we will answer the questions submitted by our participants. I will hand over the microphone to Joe, our president. Thank you. Hello, I'm President Joe Huang. Here's to bring you the third quarter outlook. The overall economy is gradually recovering, and global economy is affected by U.S. presidency election and timing of interest rate cuts. That would be our future crucial indicator. In general, IT business is coming back slowly. Consuming market is coming faster. Commercial market is coming slower. And industrial product should come back. For a commercial product should come back quarter by quarter. And industrial computer has met the trough. And we expect to see the pickup. For NCG, suffering from the inventory level digestion in Europe and America business, and we will seize the business opportunity in emerging markets. For medical business group, medical hospital operation is growing optimistically, and listing application is also on the right path. For medical consumable and devices continue to expand overseas. For NCG, due to inventory level digestion, we will accelerate in developing opportunities in emerging market and anticipate the first shipment by the end of the year. Entire IT business, the third quarter is traditionally the peak season, and sales volume is expected to increase on YOY and QOQ basis. That will be the third quarter outlook. For investment, we keep being lean and focused and keep putting efforts. And other than original business group efforts, we also put effort in ESG and sustainability, and we have also won awards. That would be reflecting our efforts. our grand fleet, we have won 15 awards in the first half of 2024. We have won HR Asia Best Company to Work for 6 consecutive years. We have won Area Corporate Sustainability Report Award for 2 consecutive years, and TSAA 3 awards. And on Computex, our booth design won the first Sustainable Design Award, Gold Medal. And for sustainability development, we have some results we want to share with you. For the 6th Taiwan Sustainability Action Award, we have won 4 awards, 1 gold, 1 silver, and 2 bronze. And the 6th Taiwan Corporate Sustainability Awards, we have also won Platinum Award for Sustainability Report. For the detailed awards, please refer to the slides. Let's welcome GM of each business group. First, Daniel, GM of ITG. Hello, I'm Daniel. I'm responsible for ITG Business Group. I'll bring the second quarter highlights. The second quarter is traditionally the off-season. Global display market sales remain flattish. The commercial display market is suffering from weak revival strength. Sales to Qisda major customers does not meet our expectation, so the sales volume in the second quarter slightly decreased. However, as we have better product portfolio, the revenue is on an upward trend. And the third quarter outlook, we anticipate the revival strength in global display market in the third quarter won't be strong enough. However, demand for commercial display should gradually recover and begin in active replenishment. Hence, we set our goal for the third quarter that Qisda display sales amount grow on QoQ and YoY basis. Next, Yuqing Lin, GM of CIG. Hello everyone, I'm Yuqing Lin, GM of CIG. For the second quarter highlights, the entire second quarter revenue and profit both grew in 2 digits on QoQ basis. Demand for projector is continued to come back. Continued material replenishment and shipment contribute to 2-digit growth on QoQ basis. Industrial and commercial new mass production model are in shipment, such as graphic tablets and post machine, successively with good market receptivity and enjoy growth on QoQ and YoY basis. Automotive module shipment, the new vehicle model is adapted by our clients, so it is beyond anticipation and grew on YoY and QoQ basis. The third quarter outlook, new mass production devices are well received in the market. We anticipate to see each business unit's revenue to grow on YoY and QoQ basis. For new projector model for European customers are shipped in July. We anticipate to see good market responses and more orders to be placed. And for industrial and commercial products for US clients, the outdoor golf sets and touch display screen are also in good progress. At the end of this year, we will produce the new CPU module, and we will increase our capital expenditure for manufacture. Thank you. Next, let's have Harry Yang, GM of Medical Business Group. Hello, everyone. I am GM of Medical Business Group, Harry. For the second quarter, overall medical business revenue grew 5% YoY. For medical device grew 8%. For QoQ performance up by 9%. The second quarter, the revenue has hit the highest in the history. We have some major breakthrough. We invested in Chengquan and Nissan Caring to integrate infectant and ethanol solution. And the second quarter, we enjoyed the contribution on the revenue. And the second quarter, we expand in overseas market. For consumable, we have penetrate in India and China. We have local plants. And in India, it is in mass production phase. It is growing continuously. For dialyzer products, in China, we have gained 23 province agreement. Based on that, we can muscle into the public hospitals in these 23 provinces. And we will keep putting effort in penetrating other provinces. And we expect a great outcome in dialyzer in China market. And Normal Baby, on June 18, we underwent board of director reshuffle. Qisda assigned the chairman to strengthen collaborative synergy to enlarge the drugstore scope. Let's look at the third quarter. We will continue to deepen medical businesses, and we will deepen post-investment management. For overseas market, we will also continue to develop, such as Vietnam. We're actively deploying the market in Vietnam. And in the third quarter, we will also enhance our strategic investment. We want to have new partner to join our grand fleet. Thank you. Next, let's have Joshua Zhen, GM of BSG. Hello, investors. I am GM of BSG, Joshua. The highlight of the second quarter for enterprise smart IT, domestic market, we keep providing transformation, AIoT, production, Meta Edge on YoY basis, stably grow. For AI application and ESG continue to be discussed. So for software and cloud, we increase sales in subscriptive software and application. For enterprise smart OT, we have seen urgent orders to increase. And we also increase stock up for long delivery material. For cybersecurity market, continue to grow. Chinese market enter peak season, and cybersecurity model gradually to be mass-produced. Smart automation stably increase on YoY and QoQ basis. In Chinese market, we have more orders and revenue is also growing on QoQ basis. Semiconductor utilization ratio is slightly bouncing back. The revenue grew on QoQ and YoY basis. For O&O online and offline integration, we have observed the inflation in European and American markets and labor force deficiency. However, in Asia Pacific market and Southeast Asia and Japan market are gradually alleviating. Demand in China market remain stable, and we will focus on AI-enabled skills and SEO solutions. Looking into the third quarter, we will put effort in cloud integration, cybersecurity, AI computing, green energy, and smart automation, and track transportation remain elastic demand perspective. And we will accelerate BSG cross-enterprise collaboration. Either it's on plants or investments, and we will accelerate overseas subsidiary operation and enhance program, and to perform necessary organizational reform and reshape. And next, we will have GM of NCG, April. Hello, investors. I am GM of NCG Business Group, April Huang. I will bring the situation of NCG Business Group. For European and American market, remain in a sluggish situation. The inventory digestion is still ongoing. For the overall performance, only India market enjoy growth margin in the first half. In the past, Alpha Network did not muscle into India market. This year, we are suffering from a decrease compared to last year. And if our competitor is enjoying a growth, that's because they have muscle into India market. And in the second quarter, compared to the same period last year, we're suffering from a downward trend. Compared to the first quarter, up by 10%. The first quarter dropped 39% YOY. The second quarter only dropped 9% YOY. In the first half, the revenue reached 10.9 billion compared to last year same period, down by 30%. And of course, it is a great decrease. Last year, we have performed integration in factories in China, and we focus on the factory in Vietnam, maintain a stable growth margin performance. In the first half, the growth margin even grow slightly by 0.01%. So revenue was not enough, so profitability was also worse than last year. In the second half, let's see the domestic use devices, such as routers or DOSes products. We have seen some rush orders to gradually being placed. They're not a lot, but we have seen rush orders to be placed. For Hytron, the single month revenue in June is on an upward trend compared to last year, same month. And we expect in the third quarter should be better than last year. For Alpha Network, the enterprise switch is still under digestion. So in general, NCG performance in the third quarter compared to last year supposed to be lower than last year. Of course, we enjoy some urgent orders, and we will actively respond to those orders to boost the growth, the revenue growth. Luckily, we have new product and new market deployments. We have seen the future growth momentum for new products other than Wi-Fi 7 and DOSes product line. We have DOSes 4.0. This is the new era product line and supposed to be able to be in mass production at the end of this year. And it should be able to bring us some new growth momentum. For new market development, so far looking forward to Asia market growth. We have mentioned India and Japan markets. Recently, we have gained new clients from both countries. We have muscle in India market since last year, and hopefully at the end of this year or beginning of next year, we can enter the mass production phase and bring better future growth momentum for NCG Business Group. And I've also seen a question being raised asking whether or not we want to establish factory in US for Alpha Network. In the past, we have established factory in Mexico due to tax concerns. But because tax is not stable, so after establishing factory, the yield is not promising. In the recent years, the reason why we establish factories is not because of the yield. It is based on the concerns of tax. And of course, it will bring more burden to NCG Business Group. And we've also seen some potential yield through EMS. So if we have the need, we will utilize the EMS resource. In the beginning, we believe to establish a factory would bring us financial burden. So we will utilize EMS. Thank you. Okay, this is Jasmine. We have investors to ask us to elaborate on slide 17. Wish us to talk more about the content on slide 17. Okay, let's look at this slide. The purpose of this slide is to explain the growth margin range of each business group. And it is inappropriate for us to indicate the growth margin of each business group based on the concern of competitors. But we also hope to offer information for stakeholders about how we distribute high value-added business group, or how can we improve the growth margin. So we expressed it in range. Let's look at the second quarter performance. Medical locates in 25 to 30%, BSG 15 to 20%, NCG also 15 to 20%, IT high value added business group also 25 to 30%. For IT original, display, industry, and brand also reached 10 to 15%, and others. And that is why the entire growth margin has reached more than 16% for 5 consecutive quarters. And you can see high value-added business group reached 25 to 30%. For the trend in blue text, on a YOY basis, medical is on an upward trend, and other business group remain unchanged, remain in the same range. For QOQ performance, that is compared to the first quarter performance, medical also on an upward trend. For IT high value-added business group, the growth margin range also on an upward trend on QOQ basis, and others remain the same. And here we talk about upward and unchanged. It refers to growth margin range. And I hope I clearly explained. Thank you. Okay, this is Peter. Due to the limited time, we want to answer many questions being raised by our investors and friends from press media. I will try my best to answer them. And for detailed information, I will invite Joe and GM to answer. For dividend, some of you asked, is it possible to commit the dividend to be 1.5 NTD, more than 1.5 NTD? And if you look back the past 10 years, since 2014 to 2023, in the 10-year period, I returned to Qisda in January 1st. In the past 10 years, we are enjoying the profit. But before that, we have been through some struggles. And it has all passed. In the past 10 years, the EPS reached 23.85 NTD. which means we have earned around 2.4 share capital, because it's around 19.6 billion. It's almost reached 50 billion PAD. Among the 20.82, our dividend is around 12.62 NTD. It means our payout ratio exceed 50%. That said, our dividend policy in the past 10 years, we have the payout ratio policy to be over 50%. If we earn more, payout ratio will be lower. If we earn less, payout ratio will be higher. Take last year as example. We earned 1.51 NTD. We issued 1.2 NTD as dividend. The payout ratio was 80%. And because the company needs enough capital to maintain the business operation and growth, that is our goal for our grant fleet. The grant fleet need to continue to grow. Therefore, payout ratio by principle is supposed to be around 50% or more than 50% to return to our stakeholders. And the other half would be used in improving the company and to invest in the grant fleet, because we need a fund to do so. And we hope to gain your support in balancing our growth. Qisda Group is not as other companies that enjoy exceptionally good performance. They have extraordinary performance. We have to keep putting effort to keep up. And we still need to adjust our business construction. In the past 10 years, also, other investors might ask this question: how come during the pandemic, we have observed the growth margin was not high, but the OP income margin was higher during the pandemic? And the reason for that is simple. We are improving our growth margin. And indeed, you can see our growth margin has grown since 2014 from 10% to current performance more than 16%, almost 17%. We're gradually improving our growth margin performance. And why our OP income margin remain low? That is because our revenue dropped in the past 2 years. Our peak period would be 2022 and 2021. In 2022, we have reached 239.8 billion. The revenue was great. The growth margin was low, but the revenue was higher, more than 30 to 40 billion. So the profit would be different. And why in the past 2 years, the OP income margin was not good? That is because we expand from medical, AIoT, and NCG business group. You can see during pandemic, due to panic, our clients are afraid of deficiency. Overbooking or even triple booking occurs during the pandemic. And the post-pandemic development is not as good as we thought. So we spend longer time to digest inventory level. And the inventory level digestion effect reflects in IT business group. 2 years ago, projector and display, especially display, suffered from inventory level digestion. Until the beginning of this year, we have finally seen a pickup in display performance. For projector, it is delayed for around 0.5 years. We can still see the performance remained low for projector performance. But for the second half, we have also seen urgent orders to be replaced. For NCG, similarly, the decline is also due to the inventory level digestion. Since the second half of last year until now, we haven't seen the trough. We anticipate to see it in the third quarter and supposed to see some great orders happen in the fourth quarter. This is due to the economic circulation. BSG also suffer from some difficulties. We have also mentioned, such as Meta Age encountered some difficulties. AIoT we have many companies won recognition, such as Aspiller, DFI, and A-Wing. But for Meta Age, because of overseas market are still digesting inventory level, and that affects our financial performance. For the market performance in domestic market, it is not bad, but for overseas market, it urgently need to digest inventory level. So in general, to sum up our dividend policy, we cannot commit to offer more than 1.5 NTD dividends, but we can maintain a 50% payout ratio to return to our stakeholders. And of course, we need to move forward to improve. Based on the 2-year efforts, we should slowly enjoy the outcome. In the second half, we should be able to see the comeback. Yes, we have suffered in the past 2 years to digest the inventory level in post-pandemic era. And I hope this would gain your support and understanding, and we will keep putting efforts in demanding ourselves to be able to overcome the difficulty and each business group performance to recover to a faster growth. And to reply your question, what is my perspective in each business group in 2025? I've also mentioned for inventory level digestion. This year, the first half, most of the business group supposed to meet to overcome the difficulty. But for NCG, supposed to come back in the fourth quarter. We hope each business group performance to come back as strong as that in 2021 and 2022 in revenue and net income performances. And other questions such as intangible assets. Should we have Jasmine to answer this question? Some investors, as mentioned, for intangible assets, reputation. As a matter of fact, since 2014, as Grand Fleet, we actively perform M&A and transform into high value-added businesses. And we incorporate good companies. And of course, for that, we need to pay for the premium. And of course, those premium, some of them goes to PPA, some of them goes to goodwill after appraisal. For the greater goodwill, such as Alpha Network and DFA acquisition. So accumulately, the goodwill is worth of 6 billion, and that could not be amortized. For PPA, the amortization period is around 5 to 10 years. And some of the company that has been incorporated for a longer time, it has almost reached the period because we keep performing M&A. Ultimately, we hope the overall synergy and profitability should surpass the PPA and related costs. Okay, I want to say more about the topic. The Grand Fleet established a reciprocal multi-wing platform. We have some results in the past 10 years, and we will keep improving on the results we have at the moment. And as you can see, Alpha Network, Simula, and MetaEdge are undergoing some struggling time. And we have also elaborated on the situation. Alpha Network should be able to see a comeback in the fourth quarter of this year, so as Simula. And for MetaEdge, should spend one more quarter to digest the inventory level. However, the inventory level is rapidly digested in the second quarter. In the third quarter, should gradually pick up. For the fourth quarter, should return to a healthy status due to the limited time. I will not further elaborate. For the post-investment management of Grand Fleet strategy, what we do is not the same as others. In 2021 and 2022, you can see all of our subsidiaries generate the synergy and market level are significant. In the past 2 years, we have been impacted by the issues that we have mentioned, such as post-pandemic inventory level digestion. Some of the subsidiaries are struggling, but we expect to see significant comeback next year, to come back to normalcy. So since 2025, in NCG, projector, and display should come back to better performance. Some of you asked Diva, the medical display performance. The performance is actually pretty good. Should we have Daniel to answer this question? To give us a brief explanation. For some specific projects and clients' products, we are not in a good place to comment. But overall, we can see the synergy and should be able to reach our goal through the final results. Overall, Diva, medical display. After Qisda Group synergy, the cost management and manufacture effect are all benefiting from this platform and can see significant growth. And another question, how we were impacted by the stock price decline, how we handled that issue. For us as management level, what we can do is to do our job, and naturally it would reflect in the stock price. And of course, in the recent days, we see the decrease in stock price. But yesterday and today, we see the bounce back. However, this is temporary. Entire Asia performance is impacted by the situation in the United States. Since last year, it has dropped from 50 to 60 NTD to this year 30 NTD. The performance this year is not ideal. And hopefully, in the second half of this year to the next year, we hope to find back the growth momentum in 2021 and 2022. And of course, we want to move forward to bring our profitability to our normalcy and what our investors expected. And we will thrive to bring a satisfying result and to return to all of our stakeholders and to gain recognition. And we believe by doing so, the stock price will naturally come back. As management level, we could not comment much on the decrease of stock price, but we hope to put effort in the business and to return the stock price. And I think most of the questions we have covered them all. Due to the limited time, we should wrap up this conference. Thank you. Currently, all the questions submitted online are answered. Today's investor conference finished. Thank you very much for participating in the second quarter of 2024 Qisda Corporation Investor Conference. We will upload the audio